Hello, everyone. Good evening, and welcome to TreadSmart. Welcome to the next video in the series that I wanted to upload. Thank you so much again for giving your time today and listening to me. Guys, what a trading day it has been on Friday. If some of you have been monitoring, we were down 2%, and then finally we ended in the positive, right? So, a lot of volatility, a lot of opportunities. What do we do? What do we do about it? We try to profit. We try to do something which helps us earn some money out of it. Hopefully, keeps us better at the end of the day. With that motive again, I wanted to present my second show to you today. And for today, it would be about Adani Ports. You guys have seen what volatility the Adani Group stocks have seen. They were all at highs, they were all at the 52-week highs, new lifetime highs, and then from there, suddenly they've dropped. They've seen a super correction, and some of the stocks were still down on circuit for today. So, what's happened, and what can we do about it? That's what we are going to talk today about. Out of all of the portfolio of the Adani Group stocks that we have, I'm going to talk about Adani Ports and Special Economic Zone today. And the reason is I find that to be the most attractive stock at this point of time. And that's what I want to share about it. Let's get going. So, Adani Ports, what does it do? So, it is in the business of ports and special economic zones. Essentially, also logistics is a big part of its portfolio and also seaborne cargo. It has 12 ports with its portfolio. It recently acquired Krishnapatnam port, which is a huge port in the eastern part of India. The current market price is 643, that was effective closing on the 17th of June, and it of course closed 7-8% high today at around 690. The 52-week high was 901, so you can see the level of correction that we have seen, and the market cap was 1.4 lakh crore. So it's a big business. It has a huge chunk of the total business of cargoes and logistics. It also operates 61 trains to transport autos, cranes, and bulk rigs. So as you can see, it's a pretty humongous business in itself. The other quick things about the business. Remember, it is a private port. There are ports which are government owned ports. They do not have the right to fix their own tariffs. For Adani, they can fix their own tariffs. They're free to fix their own tariffs, and they have 10-year take or pay contracts, as we call them, which essentially what do? They insulate revenue. So essentially, they say for a 10-year contract, if you are dealing with a particular person or business that you are sort of importing their cargo for, let's say importing televisions as cargo, right? They have a 10-year long-term contract, and every year that takes into account inflation and also increases the total rates of the contracts that they have. So again, strong business model. One third of its revenue is also in USD. So again, it's sort of insulated with the dollar movement and also the INR movement, because of course two-thirds of its revenue is in INR, but one third is in US dollars. So that gives it itself strength and also gives it sort of flexibility when there are currency fluctuations that happen. Valuations, very important before we are certain whether we want to invest or not. The price to equity ratio is 27, which is not very expensive considering a growth business that Adani is in. The price to book ratio is only 5 times, which is good considering that its price per the book that it has is actually pretty decent, right? Some of the global peers are available at more price to book than 7 or 8 times, which is a good thing for Adani to have. However, in the Indian context, with the business that it has and with the other competitors that it has in cargo business, and some of them are listed names, you guys will know about it. It's actually the costliest one, and that's why I've sort of marked that in a tinge of yellow, just to illustrate that in the Indian context, the price to book is slightly uh, is slightly heavy. So we should definitely consider it. For the return on equity, it is 14.78%. That is a solid return on equity ratio, which is very good. And they are also meaning to do and make this higher, which essentially means they are planning to do increasing capex, they are planning to do dividend payouts, which will essentially increase the return on equity. One interesting fact here, guys, is that Adani has in their board meeting let know the exchanges that they are planning to transferred 20% of the profit after tax from FY21 and onwards as dividends, and transferring them with various mechanisms. It could be dividends, could be also buybacks, but most likely dividends, as it has done. So again, a very solid reason and rationale for long-term investors to stay with the company. Its operating margin is also 51%, which is super solid. And just to get an idea, it is actually greater than some of its comparable developing market peers, such as PT Pelambuhan of Indonesia or Port of Melbourne in Australia. So, again, solid business fundamentals that we are talking about here. Shareholding. As you can see with the table and the pie chart, the promoters are holding 63.74% of the total number of shares. One point to understand as well is the pledge. There are almost 16% of shares that are currently under pledge by the promoters. That means they've used these number of shares to raise some money from the banks or other financial institutions. However, look at the far right, the change Q on Q. So they've been reducing their pledge, which is highly positive. They've been reducing their pledge every quarter almost. And as of Q on Q, as of the 31st March 2021, it was down 22%, which is a very positive development. FIIs, they've been solidly investing in the stock. They hold around 18%. It's been slightly up, which is very important and crucial. The domestic institutional investors, again, they solidly hold around 15%. They are very big influential investors, and mutual funds hold around 3.55%. All of it, which has come down a little bit as the value of Adani Ports has gone up and it has rallied. People have used it to book some profits, which is very normal. And others, that's where people like us come in, right? The retail investors. So all of us, totally, the retail investors hold around 3.5% of Adani, which has gone up 0.69%, clearly meaning that retail has chased Adani Ports and through the rally, and we continue to add on to it. So that's a crucial part of it, so that you guys understand. The most important metric is the pledge for me here. The pledge has reduced, which is very positive, and the FIIs. Remember the FII percentage, that will be crucial for what I'll be presenting in the next slides. So why the fall? The fall was essentially triggered by the following. On June the 14th, there was news reports that NSE, the National Stock Exchange, has frozen the shares of three large funds, private equity funds, FIIs, that invest in Adani Group. They had investments worth $6 billion, huge investments into Adani, most of it just only investing in Adani, and they've made a lot of money. They were all based out of the Mauritius route, which again at times raises some eyebrows when things like that happen, and thus the humongous fall. So a lot of the domestic institutional investors and retail and some of the FIIs also started selling, and that resulted in a huge fall of around 20% from the top for Adani. Also, the second reason was the Fitch report. So Fitch, which is a rating agency, mentioned that they have given the ratings of triple B minus with a negative outlook. So guys, the important thing to understand here in short is triple B minus is good. Remember, that is India's sovereign rating as well. But negative outlook is the one that is not good. And that again resulted in further weakness in the stock, with a global rating agency like Fitch saying that we maintain negative outlook. And why did they maintain negative outlook? So the negative outlook for them was maintained because the company had issued two US dollar bonds in FY21 of 125 billion US dollars, huge amount again, and it was used to repay USD $500 million of bonds that were actually redeeming in 2022. So as you can see, they used to raise some money in cheap, of course, because currently money is cheap. You guys would be aware the interest rates in India are cheap, the US Fed is cheap, the US Fed has kept rates low, and then the money is available pretty easily. And that resulted in Fitch actually saying that, hey, we are still not sure of what's happening with Adani, and thus we need to make it with a negative outlook, that there is a possibility of downgrade from triple B minus, and that's a big deal. Triple B minus is known as investment grade. Anything below triple B minus is actually junk, and we don't want shares to go in junk if they have good value. So these are the two reasons why the stock fell, and it caused a lot of losses to some retail investors and to Gautam Adani himself. Moving to the next slide, what should we do? What should I do? What have I done? I've bought on dips, and I recommend you guys to buy on dips as well. There will be dips, guys, and there will be some rallies. Keep on buying small amounts of the company and keep on adding them till it reaches 800. Post that, it should be a smooth move to around 930, which is my target and where we can book profit. Why should we do that though? Why am I recommending this to happen? The company's market share is solid. In India, it holds around one fourth of the business. It is a private port, is free to fix tariffs, sticky businesses. They have the best technology in their ports. You talk about Mundra, there is hardly any other port in India that has better technology than that. And a lot of the importers that are using those ports cannot migrate to other ports. They just can't because they need that technology to import products into the country. So even if Adani does increase rates, which they will very likely do, they can't move out, right? Because first of all, they have 10-year contracts, and then they need the technology to be available, and of course the connectivity that Adani provides. So the technology expertise is a huge important metric why we should still invest in Adani ports and special economic zones. I think it is the value that it holds, the land bank that it holds is humongous, the value is huge, and also very important thing, Fitch raised this report in terms of the concerns about debt. I just went in and tried to analyze what is the cash balance and what are the sort of expenses and interest costs that they have. So this is what I found. Their cash balance as of FY21 was 53 billion rupees. And listen this carefully, guys. It's quite big numbers. I'll repeat it. The cash balance was 53 billion rupees. The operating expenses for the whole year, if they were to run the business, would be 33 billion rupees, and the interest cost would be 21 billion rupees. So if you total these two, guys, the operating expenses and the interest cost, you will reach to $54 billion, which is essentially almost equal to the cash balance that they have. And remember, that's with the business not running. If the business runs, if the business keeps on generating cash, they will have more than the amount of cash by the time this money is expired. So there should be no problem with no COVID lockdowns and the business currently doing well to generate enough cash. And that gives me enough confidence to say that this is a correction that should be bought to, and this should be a correction that everyone should dip into it. Have a stop loss of 620 rupees, and we'll sort of revise that as we go ahead. But 620 should be a stop loss below which we should be further concerned. But if it does not go below 620, guys, keep on buying, keep on adding, and we should be hitting the target of 930 pretty soon in the next few months. Hope you have enjoyed the video. Hope it will help us all get money and create some smart money and tread smart, as we say. So if you've liked the video, please like the video, subscribe to us videos, and please press the bell icon so that you get the notifications. Thank you so much. Take care, everyone.